Ethereum's popularity, a double-edged sword. A16Z's State of Crypto report. Despite high transaction fees, Ethereum's development and demand are unmatched, according to crypto venture fund giant Andreessen Horowitz. The firm does warn that its popularity is a double-edged sword, given that Ethereum prioritizes decentralization over scaling, resulting in competing blockchains stealing market share with promises of better performance and lower fees. A16Z's State of Crypto report for 2022 has 5 key takeaways, according to data scientist Darren Matsuka, Head of Protocol Design and Engineering Eddie Lazarin, General Partner Chris Dixon, and Head of Content Robert Hackett. The takeaways were shared in a blog post introducing the report. The report focuses on topics such as Web3 development, crypto adoption rates, decentralized finance, and stablecoins. According to the report, Ethereum has the most builder interest with around 4,000 active monthly developers compared to second-ranked Solana at 1,000. Bitcoin and Cardano are next in line at roughly 500 and 400 apiece, respectively. The analysts noted that Ethereum's early start and strong community have contributed to its position as the leading platform for decentralized applications, but emphasized that the platform's continued development, despite high transaction costs, is a significant factor in its success. Yeah, absolutely. People are continuing to utilize Ethereum even though the fees are very high. I don't know if it's ease of use, familiarity with it. But yeah, I mean, it still has remained pretty popular even when other platforms are charging a lot less. The report also provides data on the estimated transaction fees paid on various blockchain platforms over a 7-day period. Ethereum is estimated to have generated $15.24 million in fees over this period, while BNB Chain, Avalanche, Phantom, Polygon, and Solana generated a combined total of $2.5 million. Layer 2 scaling solutions are working to bring down Ethereum's fees and improve transaction speeds, while also pointing out that long-awaited upgrades are coming to Ethereum to make the network more efficient and cost-effective. The much anticipated upgrades can't come soon enough, but A16Z's report shows that over a 30-day average as of May 12th, active addresses and transactions on competing blockchains, including Solana, BNB Chain, and Polygon, are already outpacing Ethereum. The data reveals that Ethereum has 5.5 million active addresses and a 1.1 million daily transactions, while Solana boasts an impressive 15.4 million active addresses and 15.3 million daily transactions. BNB Chain takes third place with 9.4 million and 5 million, while Polygon rounds out the top 4 with 2.6 million and 3.4 million. Analysts have come to the conclusion that the blockchain industry is not a winner-takes-all situation. They compare this industry growth to that of other computing waves, such as the PC and broadband in the 90s and 2000s, and mobile phones in the last decade. They believe that there is a lot of room for innovation in the blockchain industry and that multiple companies will be successful. Absolutely, I think that we've seen that thus far. I mean, there has been multiple companies within the space that have done well. You know, a lot don't succeed, but it's kind of like any regular brick and mortar startup too. How many businesses actually do well and take off and make money, and how many flop? So it's a similar situation here. Up next here, South Korean legislature considering new licensing system for crypto. A report commissioned by South Korea's federal government has recommended that the domestic crypto industry adopt a licensing system for exchanges and token issuers as a way of protecting investors. The report issued by the Financial Services Commission, FSC, outlines a need for new regulations to help prevent insider trading, pump and dump schemes, and wash trading. The new regulations would be more strict, and the penalties for failure to comply would be more severe than those in the Capital Markets Act that the domestic crypto industry currently abides by. A new report is recommending that a licensing system be established for coin issuers in Korea, such as companies operating initial coin offerings and crypto exchanges. The report, titled The Comparative Analysis of the Virtual Property Industry Act, suggests that different licenses be issued based on the level of risk involved. It's an interesting thought there. A robust licensing system for coin issuers is considered to be the most urgently needed protection in the market today. This is underscored by the recent market crash that was sparked by the fall of the Terra project. The founder of Terra, Do Kwon, may be called before the National Assembly to explain what happened. One suggested regulation would require companies issuing coins to submit a white paper to the FSC detailing their project. This would include information about the company's officers, how it plans to use funds raised through an ICO, and what risks are associated with the project. Interesting. What do you guys think? Do you think that would be a good move for crypto? Do you think not? I'm interested to know what your guys' thoughts are on all of these regulation ideas. Updates to the white paper would have to be submitted at least 7 days in advance of proposed changes taking effect. Even companies with headquarters abroad that want their tokens traded on Korean exchanges would be required to adhere to the white paper rule. Companies that wish to have their tokens traded on Korean exchanges must follow the guidelines set forth in the white paper. The FSC has likely been considering stablecoins for some time, but recent issues with Terra USD, DEI, and Tether USDT have led to recommendations for stricter requirements on collateral use and minting for stablecoin issuers. The report also aims to address concerns about questionable trading activity by local exchanges and coin issuers. It suggested regulations on insider trading, price manipulation, pump and dump schemes, wash trading, and industry standard transaction fees. An industry insider speaking to local media acknowledged in April that provisions in the Capital Markets Act may not be adequate to properly govern the crypto industry, according to Cointelegraph. So, I mean, yeah, only time will tell how this works out. Again, a lot of people pioneer these regulations, and then other countries kind of take what they like, dump what they don't like, and go from there. Up here it says President Yoon Suk Yeol of South Korea was elected in part due to his interest in the cryptocurrency industry. On May 3rd, he announced that his administration would push for a bill that would extend the tax-exempt status of cryptocurrency investment gains until a proper legal framework is in place. And I do like that. I mean, how can you tax something that there's no guideline around? I mean, that makes it very hard. It makes it easy to do things that you technically shouldn't be doing when you don't even know. So, I think that that's a smart move. Up next here, Bitcoin shakes off Fed volatility as analysts remain split on return under 24K. Bitcoin prices surged past $30,000 on May 18th after fresh comments from the United States Federal Reserve sparked volatility in the market. As Federal Reserve Chair Jerome Powell delivered economic policy insights during the Wall Street Journal's Future of Everything Festival, the pair became unstuck. In an interview with the paper's chief economics correspondent, Nick Timieros, said that he doesn't know if financial conditions have been tighter than this for a very long time. Powell indicated that the Fed plans to continue increasing interest rates at a rate of 50 basis points per meeting until rates reach a level that is not stimulative or restrictive to the economy. He noted that this process could take place in the fourth quarter of this year, but that further increases may be necessary if inflationary pressures continue. With traditional markets already pricing in such a scenario, volatility overall was limited as Powell avoided surprises. BTC USD briefly dropped to $29,500 before recovering during Powell's words. However, with risk assets set for difficult times as financial tightening continues, crypto market commentators had little by way of highly bullish news. Potential rate hikes next year could spell trouble for markets, according to macro analyst Alex Kruger in a series of Twitter posts. Kruger noted that every Federal Reserve official has a different definition of neutral interest rates, with estimates ranging from 2% to 3%. Futures markets are currently pricing in a 3.25% rate by December. Fed Watch tool from CME Group is suggesting that by December's FOMC meeting, the target rate should be between 275 to 300 basis points. And here they have a chart of that. In his latest update focused on Bitcoin, popular trader Dan Crypto Trades noted that the cryptocurrency managed to close above the 28.8K range low as well as a 30K low, which marked the initial wick down in May 2021. He added that the next HTF resistance in the 33K area and that a test of that makes sense. Fellow account Don Alt, recently highlighted $34,500 as a key level for a more bullish perspective on BTC. As Cointelegraph recently reported, an increasing number of players still favor a return below the $23,800 lows seen last week at the height of the Terra Luna and Terra USD or UST implosions. Trader Crypto Tony told Twitter followers that it is unlikely that the price of Bitcoin will retreat to $20,000 as it takes time for bottoms to form. So that is their opinion, and it says here others, meanwhile, feel that a $20,000 retreat is unlikely. What do you guys think? You think that'll happen? Where do you predict the price of Bitcoin going? I always love to read the comments and see what your guys' thoughts are on that. Up next here, Dutch regulator says crypto is not yet suitable as a means of payment or investment. A Dutch regulator has suggested that the crypto derivatives market should be restricted to wholesale trade. The reasons for this are familiar: lack of transparency, market manipulation, and other forms of criminal activity. At the Amsterdam Proprietary Traders Managers meeting, Paul Willem van Gerwen, the head of capital markets and transparency supervision at the Dutch Authority for Financial Markets, AFM, shared his opinion on the crypto derivatives trade. Despite the rising interest in crypto derivatives trading, the AFM regards such trade as entailing risks. A specific problem arising from the volatility of the crypto products is that it leads to a question of whether the parties to the derivative transaction will be able to fulfill their promises. The AFM official acknowledged that, unlike the British Financial Conduct Authority, the AFM has not banned crypto derivative trading, but alluded that it surely might do so in the future. The official advised against letting oneself get caught up in the excitement of this trading and instead cautioned against engaging in retail trading. He also said that cryptocurrencies and related tools are not yet suitable as a means of payment or investment. Van Gerwen spoke about the distributed ledger's impact on clearing operations and sounded optimistic about the advantages of using blockchain technology. He was cautious while commenting on the industry's possible role. Proprietary traders generally don't get involved in clearing, but technological developments could lead to a situation where traders start clearing themselves. The speaker encouraged attendees to take part in TDLT pilot cases managed by the Dutch financial authorities in a sandbox environment. The Central Bank of the Netherlands has issued a warning to Binance for offering crypto services without the required legal registration. So there's always something, like as we just read, South Korea is trying to provide legislation to regulate it more and help it. And now this Dutch regulator is like, yeah, no, we might be banning it, these types of trades in the future. So as you learn more, you know. This issue was first brought to light in August 2021, and the central bank has since been investigating the matter. Binance has been ordered to cease all operations in the Netherlands until it has obtained the proper registration. So there you have that. Again, I'm always just so interested to see why some countries are like adopting it and going all gung-ho, making it legal tender, and then others are like, yeah, no, I think we're going to ban it. It's just too new, I think. Up next here, crypto giants co-launch chain abuse platform to water down rising scams. 7 crypto companies have joined forces to create a new scam reporting tool called Chain Abuse. The tool will allow users to issue warnings and discuss ongoing fraudulent activities such as scams and hacks in real time. The Chain Abuse platform was launched on Wednesday with the aim of countering the ongoing scams plaguing the crypto ecosystem. On May 4th, Cointelegraph warned the community about the rise in ape-themed airdrop phishing scams. Chain Abuse is a platform where crypto users, victims of financial crimes, and crypto businesses can report scams, discuss them, and issue warnings to reduce the effectiveness of the scam. TRM Labs pointed out that crypto companies often post warnings on social media platforms like Twitter and Discord, but these can be easily missed and difficult to keep track of. However, with Chain Abuse's public forums, companies and crypto investors can upvote, downvote, and leave comments to provide additional info about a reported illicit activity. pretty interesting. Chain Abuse is a free platform that catalogs instances of fraud and other illicit activities in the cryptocurrency space. Joe McGill, the platform's chief architect and a former U.S. Secret Service and postal investigator, believes that this will help the crypto community to root out bad actors and protect themselves in the future. McGill says that Chain Abuse was designed to make it easier for more people to play an active role in advancing this culture of safety in the cryptocurrency space. Hopefully that helps people, feel a little bit better. They can go there if they're leery of something and see what other people think, if people have reported this as a scam or not. Here we have this same tweet from Binance Turkish about the fraudulent billboard that Binance Tourist Exchange was putting up. Additionally, every representative from the 7 crypto companies placed emphasis on the need to protect the interests and people of the crypto community. They stated that the fear of scams and being hacked hinders the overall adoption of cryptocurrencies. I think that they are right. Binance, one of the world's leading cryptocurrency exchanges, has taken a strong stand against scammers who have been using billboards to advertise fake Binance-branded investment opportunities. Binance's Turkish arm has been particularly active in taking down these false advertisements and warning the public against them. This is a major victory in the fight against crypto scams, and it shows that Binance is committed to protecting its users and their investments. In its latest warning, Binance Turkey showed a billboard advertising the Binance Tourist Exchange, which has no affiliation with the original Binance founded by Changpeng CZ Zhao. And again, we talked about that on April 15th. Binance launched its first 24/7 customer service center in Turkey. So that will be pretty cool. And last but not least here, SEC chair uses crypto enforcement and justification for FY 2023 bill. Gary Gensler, chair of the United States Securities and Exchange Commission, SEC, has raised concerns about cryptocurrency enforcement in its budget request for the next fiscal year. The U.S. House Committee on Appropriations heard from SEC Chair Gary Gensler regarding the president's proposed budget for the SEC in FY 2023. Gensler stated that he supported the proposed budget of over $2.1 billion, which would allow for an increase of 50 people in the SEC's enforcement division. The SEC chair went on to cite concerns about the cryptocurrency space, calling it highly volatile and speculative, and noting the need for new tools and expertise to address enforcement issues. Gensler said that the additional staff will help the division investigate misconduct, accelerate enforcement actions, and improve litigation support. I'm just going to throw my opinion here. I hope they hire people who are well versed in the crypto space, who know what they're doing, who know how the blockchain works, who know how these different projects operate, and not just get like someone in there that wants to be an enforcer. I think you need a good balance of both. He also said that it will bolster the capabilities of the crypto assets and cyber unit and help investigate the large volume of tips, complaints, and referrals that the division receives from the public. At the hearing, Gensler reiterated his view that many token offerings likely fall under the SEC's regulatory purview as securities and should be registered accordingly. He stated that investors are currently not well protected given the SEC's limitations on enforcement. Gensler emphasized the need for more funding to be dedicated to issues related to the growing crypto space, citing the 8590 enforcement actions that the SEC had brought against digital asset firms in the last year. He also referred to the recent price volatility of a crypto asset, which he said had lost nearly all of its value within a span of 3 weeks. The recent volatility among major cryptocurrencies, including Bitcoin and Ether, following the collapse of Terra, has caught the attention of more than a few regulators and lawmakers in the United States. On May 12th, Treasury Secretary Janet Yellen addressed the House Financial Services Committee, including in her testimony that Terra USD and Tether depegging from the US dollar was not a real threat to financial stability, given the scale of the stablecoin market. So seems like, again, even in the government and within these regulators, there's some differing opinions. That's all we have for you today. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.